Good morning, good afternoon, and good evening, depending on where you're at across the country and across the globe. This is Dennis Wilburn with the Active Trend Traders. I want to welcome you to the Making Money Trading Stocks and ETFs webinar, where we spend about 10 to 15 minutes just going over what we've seen happening this week, what we see maybe setting up for next week, and we are entering some time that is going to be very excellent opportunity time for the markets. So I want to remind everybody that all the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So I want to welcome everybody. Here's a little bit about who I am, where I've been, what I've done. While I'm showing this, those of you who are in the San Francisco Bay Area, I'll be back in the Bay Area for the first weekend in October. We're going to have a Bay Area Moneymaker meeting at 9 o'clock on that first Saturday in, I think it's the 7th of October. I think that's the Saturday. 9 o'clock in the morning, Masonic Temple down in San Jose. And we're going to be continuing on with our instructions and our discussion about getting rid of those limiting beliefs that keep us from being able to celebrate and experience the abundance that the market does provide or can provide. So if you're in that area, hope you can join us. You can always join us via webinar also if you want to become a Bay Area moneymaker. Seasonality gets us in the ballpark. Technicals get us in the ball game. I want to highlight that this week simply because we are approaching some very, I haven't got to say it, exciting times for the seasonality in the indexes, and then that'll spill over into the seasonality in the individual stocks. We're in a kind of a window of time, and we'll be taking a look at that here shortly. This portion of September through around the 29th or even the 30th of September. The month of September ends on the 29th as far as trading goes, where we should be seeing some good weakness in the market. That'll set us up for our pullback, hopefully, into the October timeframe, when we should get our last big surge into the end of the year. So the objective of the How to Make Money Trading Stocks webinar is basically timely actionable intel review at the end of the week of what we took a look at on Monday with the Aftermarket Mondays. There's kind of a two webinar and two video presentation. We do a real quick market review, stocks, ETFs, setting up for and the outcomes of any that we saw setting up earlier in the week, and the what else's. I like to think of what we do with regarding training and the clarification and simplification of how to approach trading with the active trend trading system is basically, our members have been given the keys, now learn to open the door. And from the emails that I received from a lot of people that, saying, hey, I'm applying this and it's really working for me really well, that's always encouraging for both myself and Mike Traeger, who's my research partner out of Dallas, Texas. Okay, as about 9 o'clock this morning, the active trend trading system is up about a little bit over 34%. The indexes themselves doing well. NASDAQ up 21% for the year. NASDAQ Composite up about almost 20%. The Russell kind of kicked in gear over the past couple of weeks to it hasn't met or reached what the other indexes have done, but it definitely is not lagging like it did earlier in the year. Let's take a look at the indexes to see what we can see. I've got a daily chart on the left and a weekly chart on the right. This appears to be a topping type pattern on the S&P on a daily basis. Why do I say that? Well, a couple of reasons. One, 3 days ago, Wednesday, we get this just beautiful hanging man. Just as the TSI starts to tip, then the day after that, we're followed by a large red bearish candle, and now we've bounced on the bounced on the 8-day moving average. However, what do we see going on here? We see, one, the TSI has in fact rolled over. As prices were making a new high, the momentum on a daily chart was not making a new high. Therefore, we had negative divergence there. We had earlier in the week on the S&P, actually not earlier in the week, but about, let's take a look at this, right about there. On the market forecast, we had a 3-line bearish cluster. And what's the rule, kind of the rule of thumb on the clusters is that typically within, 1 to 4 days, we should get a reaction on price action. And sure enough, that happened on that day, which was, I think, Friday of last week. And so 1, 2, 3, 4 days later, in other words, you get a reversal on day 3, a reversal signal. And then on the 4th day, we get the price action turning over. Now, will it continue to fall? I like to go back and take a look at what has happened in the past where price action, where we've got a TSI rollover, and what took place over that that little bit of time after that until we get a bottoming effect with the TSI. Well, if you go back and take a look, every time that we've had a TSI rollover at the highs, okay, this is up in the extended area. Yeah, come on. There we go. Over here in the extended. Hey, I just heard what I thought was Michael. Okay, but anyway, when we've gotten these rollovers and the crossovers to the downside, we have gotten a healthy pullback, which reset the, reloaded us back up where we get another reaction, reaction and then a surge, reaction, then a surge. And so it appears as if this may continue to pull on back down. We could see it get, where to? 2480 for sure, or the 50-day moving average, which is currently about 20, let's say by next week it'll be up about 2470, or we could even drop a little bit further than that down to the bottom calendar channel. But typically when we've gotten the crossovers, that means the upward momentum and upward price action on the TSI, or correction, on the entity that where you got that crossover, has either stopped or definitely slowed down. So am I looking to get short the S&P? Probably not. However, I will talk about 2 things that I might be willing to get short on, and that is the NASDAQ, and I would use either the QQQs, buying puts on those, or I would do the inverse ETF, the SQQ, if I can get, there we go, come on. So as we see, just love it when your computer kind of like has a mind of its own. Now I see you can't see me anymore. Yeah, come on. Yeah, what's going on? It says it is connected. Now let's go over to the Russell and see if that one will come up. Okay, I'm going to basically, I'll come back to the Russell, I'll come back to the NASDAQ. Hopefully the bandwidth issues that we're having will go away. but we'll go ahead and finish out today's presentation and discussion. Okay, so here we're back, and we'll get back to the charts in just a second if they in fact come up. Okay, here's some of the stocks that we're watching. You know, what happened? We've been watching IWM, QQQ, spiders, you know, and asking the question, is September weakness going to kick in? Where is it if it happens? And I'm going to be looking at the seasonal charts here in a little bit. I believe, here's the way I'm posturing myself, is that we are reaching very extended prices on both IWM and QQQ. So what I'm looking for is to trade the inverse ETFs. Now, I don't do this very often, but I think that because we match it up with seasonality issues, is that the seasonality may provide us a really nice little pullback. That is a tradable one with SQQ and TZA. Here's the other stocks that I will continue to watch. Netflix, Tesla, and NVDA. All of those have been paying off for us very well. Keep in mind, Netflix is kind of the first of the major, the Facebook, the FANG stocks to report, and it reports on I think the 6th or 7th of I think it's about, or maybe it's the 16th of October. Be looking to enter a option position on this, or to buy it, because Netflix tends to do a pre-earnings run, and we'll capitalize on that. Tesla, NVDA have been doing pullbacks this week very dramatically, and then YY Cruise and LGIH just came on. You know, they were floaters that came to the surface a couple of weeks ago. And then our catfish specials that we're keeping our eye on are Kiwi, F5, and JCOM. JCOM looks very interesting in that it looks to be in a channel and may be ready to bounce off the lower level of the channel. This is just a reminder about the BAM meeting, the Bay Area Moneymakers, and I'm going to be talking about stop shooting yourself in the foot when it comes to your trading. So here's what I wanted to highlight on the NASDAQ seasonality. Here's where we are. If we were to blow this up a little bit, and I'm going to go here, here's where we basically are. We're right around this area in September, and as you can see, the NASDAQ tends to, doesn't have to, but tends to sell off into the first part of October, and then get set up for a move higher into right there and right there, then get set up into moving higher through the rest of the year. The NASDAQ, and I want to draw this to your attention just, very succinctly, tends to have the most powerful run along with the Russell. The Russell going through the same kind of iteration around that time of year when we expect it to sell off into the first part of October and then do its rebound. Now, if we take a look at this, it tends to run about 6+% from the first part of October through the end of the year for the NASDAQ. And as you can see here, we tend to run up almost 8 to 9% on the NASDAQ itself. So if we take a look at that and add into that the 3-time leverage ETFs for both of those, that could be an exceptionally good return prior to the end of the year. So that's what we're waiting on. Okay, so here's where we're sitting as we can see, strategy 3, which is our wealth and income strategy, where we sell weekly weekly premium against the spiders, the Tesla, and NVDA is doing quite well. Strategy number 2 is picking up, and then strategy 1, we will see a nice increase in strategy number 1 going into October, November, December timeframe. Very pleased with where we're at. My objective for the year with the active trend trading is 40%. With a 60% win-loss ratio, and currently we're sitting at about 65%. We started the year with $116,000 in our marginable account. So the active trend trading system, my motto is clarify, simplify, so that everybody can multiply. we identify the pillars, what to trade, top quality IBD growth stocks, and top-notch ETFs. When to enter, when to exit, what strategy we're going to use, and then what we expect to happen. One of the things that we've just introduced here lately is called the go, no-go list, which I did provide a copy of that in the handouts. And so if if you want to, you can go to the handouts on the okay, excellent. So you received that, and just to take a look at that and say, hey, here's what we're looking at. A couple of months, I will note this week, we didn't do a lot of trading this week simply because it was Fed week. But here's two that were, Tesla and NVDA. Both of these gave very good indication. Tesla provided some really downside, but I identified on the 18th, sellers came in at 390. What happened from there? Of course, well, Tesla has dropped about 30 plus points since then. NVDA, very extended. Breakaway or exhaustion gap, was that what we were looking at? And sellers in at 191. So even though, I may not have actually put in the trades on these, it provides all premium members exactly the technical analysis that I'm looking at, so that they can also plan their trades around that. Again, I've gotten, just emails in from the members saying, hey, that's working for me really well. And it helps them strategize for their own weekly trades. So with that, that's just about it. Let's see if our charts have come back up yet. Yay, they have. Hold on a second. Here we go. Here is the Russell. As we see, the Russell, what I wanted to highlight to folks is that it is right up against past resistance from this past high. So yes, Russell has put in this big cup pattern, but that cup pattern can also be looked at as being a double top. A double top. Now, given that it is this time of year where we would anticipate a pullback on the Russell, well, I can sit there and go, okay, I am just suspect that this is going to go much higher. I want to be looking for a reversal down to the bottom side. What do? I can basically do a couple of things. One, I can just draw in if I break that trend line, then that probably means I'm going to head back down. And that's one of the things I'll be looking at. At this point, we have no indication, no weak candles showing up on the Russell that the reversal is imminent. However, what we do have is that the TSI has reached over the plus 50 level, and as you can see, going back even into last year, when it reaches over the 50 level, it tends not to stay up there for very long. It will then do a pullback. Now, will it do just a regular, seasonal type pullback? Well, if it does, hopefully that would, well, hopefully, I won't say hopefully, but that could indicate that we're going to pull back at least down into this midsection here. Let me throw in NDX. Hopefully that'll come right up. It did, yay. Okay, NDX looking a little bit weaker. Let me remove that. Okay, this was one of the breakout areas where it's broken down below it. We have a longer term uptrend line, so that if that's busted, that could give us some indication of what may be downstream going into 2018. But right now, I just want to treat this as a pullback into a level of support for a bounce going into the end of the year. TSI pointing down, momentum pointing down, or on the market forecast pointed down. And as you can see over here on a weekly chart, the momentum in the TSI has just been kind of moving sideways. Not a lot to write home. If we finish where we are right now for the week in NDX, we will have a bearish engulfing of last week's candlestick, and therefore the anticipation would be that we would drop further from there. And so, we could just kind of keep an eyeball on this. We've got the 8 and 20-day moving average trying to roll over. If we do break the 50-day moving average, then we're probably going to roll all the way down to the 5,800 level for support, or the 5750 level. So that's what I'm saying. And so that's why I like SQQQ, the inverses. Again, it's kind of made its initial reversal. Let's see if it retests a little bit down on the 8-20-day moving average. That's with the anticipation that we will probably have a weakness going into the end of the year, and then, or not in the end of the year, but over the next 2 to 3 weeks to the midsection of October, and that's when we would expect things to pick back up. TZA. Again, similar type thing here with TZA. Now, as you can see, the contango and the backwardation on TZA is evident, because as you know, IWM is just back down here at its past support. TZA has dropped a little bit below it. So if you're going to trade this, go to IWM. And then basically learn how to trigger TZA trades off of IWM. So what I'd be looking for is a reversal signal on IWM. I would like to see the TSI turn over and cross, and then I would be looking at buying TZA. So, okay, my friends, that's all I have for today. Sorry I ran this a little bit over, but I wanted to share specifically with you that aspect of what I'm looking at, and why the next 2 weeks, well, yeah, next 2 to 3 weeks are, I believe, going to be very, just a very excellent time for setting up to go into our end of the year seasonal trade, and we may be able to take advantage of that, of the basically pull back into a support level, if the seasonality works out the way it has over the last 30 plus years. So again, 2017, a season of explosive growth. Keep growing the egg. Trade wisely, trade profitably. If you want to get in touch with me, you can find us here on Facebook. You can find us here on Twitter. And of course, my email address is down here. My phone number is there. And so with that, if you're a premium member, hang on. We'll be back at 12 noon for the final hour. And so until Monday, I will have the Monday after market Monday. However, next Friday, we will not have a webinar. Next Friday, I will be traveling to visit my mom back in Arkansas. And so I just need to take care of some mom business. And then we'll be back online, I think, after that, the following Friday, when I'll be back in California, just prior to the BAM meeting. Anyway, with all that, God bless everybody. Have a great weekend. Stay tuned for some exciting times in the market through the last 3 months of 2017. Aloha.